Tesla stock is down about 5% today. We talked about this in the video yesterday, that there was a big move coming here really in the next couple of days. Not just today, but you could move big tomorrow as well as Friday. This is a high volatility period I'm expecting for Tesla and for really just the broader markets. And you are seeing that. The S&P is down almost 1% at the time of recording this video, sitting at your 200-day moving average. How markets react around this level will be very important. We do have a lot of big news today for Tesla. But again, it's important to remember that Tesla is not really reacting to good news these days. There's so much fear, uncertainty, and doubt. It's really within retail investors, hedge funds, and institutions, but mainly retail investors, which is kind of strange this time around. Now it's hedge funds and institutions are more bullish on Tesla than a lot of retail investors. So you don't have that extra oomph when you do get good news to send the stock higher. It seems like the markets focus on the bad news if there and when there is bad news versus all of the good news. Tesla also generally has a high beta, so whatever the markets do, Tesla just really amplifies that. And today you're seeing a sell-off in tech. Anything that's high value, high beta, is getting sold off dramatically. You could see the XLP, Consumer Staples ETF, is actually up 1%. The Momentum, the MTUM ETF, is down 1.5%. So there is a very clear rotation, and Tesla is on the losing side of that rotation today. I'll talk about why that is later on throughout this video as well. But first, ladies and gentlemen, yesterday the Financial Times posted an article suggesting that Tesla had shady accounting with $1.4 billion, quote unquote, missing. But in reality, the Financial Times just didn't understand the accounting, and an expert reached out to them to explain it to them. And the Financial Times today is apologizing for this, saying it's necessary just to trust the auditor's judgment. Tesla will be displaying its Optimus robot today on Capitol Hill. Tesla is participating in a robotics symposium, which is funny. The official Tesla account just shared this Financial Times article and says FT with this funny meme. Tesla also posted on their official Tesla X account, "The future is autonomous and it starts in Austin this June. Thanks to Austin City and Texas DOT for hosting and supporting our efforts to unlock safe and low-cost premium point-to-point electric transport." And they share this picture of the Cybercab. Eric, he is the principal engineer and lead engineer on the Robotaxi, shares this post from Tesla and says, "Exciting day talking about Robotaxi with critical operational stakeholders. Thanks again to officials at Austin Transport and Texas DOT for organizing these AV exhibits." And as Sawyer Merritt says, which I will also reiterate here in this video, "I get more bullish on Tesla meeting a timeline when the employees start hyping it." And just to point out the obvious here, Tesla stock fell 50%, even though the big catalyst, which is Robotaxi, is, well, still coming as scheduled. Optimus is coming faster than expected. We have a new Megapack factory, FSD, launched in China. The Model Y is selling very, very well in the markets in which it's scaling into. I don't really see why the stock is down so much besides some of the recession risks. And we'll talk about the news today that is causing this broader rotation in markets. And if you guys wanted to see just one of the stupidest things you'll ever see in your entire life, here is this short video of a guy that was arrested yesterday after slamming his mini four-wheeler into a Cybertruck. I mean, I'm surprised the four-wheeler didn't break. Be honest. Look, that looks like what, coolant? I'm not an expert here. That looks like coolant right in the front that almost took a lot of that hit. That would have been sad to hit a Cybertruck and walk away with no four-wheeler. Canada has frozen all rebate payments for Tesla and banned the company from future EV rebate programs due to tariffs. The Transport Minister Chrystia Freeland said today. But not a single other automaker was removed. So is it really the tariffs? Tesla China seems to have overtaken Q1 2024's registrations with the new Model Y ramp. This is something that's being talked about now today, but we talked about this yesterday. You're actually seeing better delivery numbers quarter over quarter or year over year when you're looking at Q1 2024 to Q1 2025. Tesla's actually in positive growth territory in China. We'll see what the US looks like. We don't get as much data there, but it could be something similar, which should lower some of the fears of this brand destruction, quote unquote, for Tesla. Tesla is expected to release their Q1 production and deliveries results 1 week from today on April 2nd before 9:30 a.m. Current expectations are for a vehicle delivery number of 360,000. Tesla will also release their Q1 energy storage deployment numbers. I think, again, with the stock down 50%, you could be due for a positive surprise here, right? You're only expecting 360,000 units, 380,000, 400,000 units, something like that could be possible, and that would be positive for the stock and likely move the stock higher. Tesla's AI X account says you drive with eyes and a brain, not a suite of sensors. Our cars do the same. William Blair, Tesla analyst Jed Dorshmer says, quote, we view the $7,500 tax credit as less likely to be axed with the Trump administration's continued support of Elon Musk and Tesla. Delivery numbers are coming down and growth in the auto business this year may be off the table. We are reducing our delivery estimates for the first quarter from 418,000 to 450,000 and for the full year from 1.94 million to 1.68 million. Despite the correction in the auto business near term, we remain positive on the faster than expected ramp of the Megapack business and ride sharing rollout this year. And that's kind of what to expect really over time, right? It's going to be less about the vehicle aspect and more about the other components of Tesla. We just need to see revenues come in from those other components that continue to, scale, and then ultimately profitability. That's what's going to drive Tesla, whether it's profitability from AI components, Robotaxi, or whether it's profits from selling cars, and preferably both. The Tesla UK official X account has announced they have delivered 250,000 vehicles across the country. And Sawyer Merritt posts a video of the Robotaxi and says the future is autonomous. And Tesla, the official Tesla X account, responds and comments and says, almost here. Option activity today for Tesla is coming in pretty neutral, way lower, 10 times lower than what you had yesterday. You've had 68 different trades today from hedge funds and institutions, totaling around $33 million with a positive order value of 51%. Yesterday, you had almost $400 million worth of option activity. So we'll see if the numbers finalize towards the end of the day today and we get a jump there, but a very low dollar amount. What's also interesting is you do have 754,000 shares that are being sold short today. Tesla's search trend activity still pretty much unchanged from the last report that I gave you, clocking at about the same numbers as you had last year during this same time period. So not much of a change on a year-over-year basis. In this environment where there's all these fears around Tesla, I would say that is a positive overall for the business. Now, here on the day today, we actually had some good economic data, which is surprising. I guess how you define good is, up for interpretation. But durable goods orders last month came in at 3.3%. Now, for this report, we had 0.9%, so way lower than what you had in January, but way better than the expected negative 1% decline. So I don't know if it's this that's causing Wall Street to rotate into consumer staples and out of tech. That in and of itself is normally a recession kind of trade, right? You go into consumer staples, you get out of tech, you get out of high beta, and you could see those kind of stocks selling off again, huge today. So you don't really see that reflected from the durable goods orders. It could be some of the tariff comments coming out from the Trump administration that is causing some of the renewed maybe recession fears. Trump, even about 30 minutes ago, an hour ago or so, says that he is preparing auto tariff announcements as soon as Wednesday, which is today. Fed Kashkari today says, I take very seriously the hit to confidence. The longer it lasts, the more meaningful it is. Fed Kashkari says the good news is that if there are resolutions of trade uncertainty, confidence could be restored. And Fed Kashkari says it's conceivable that the hit to confidence could be a bigger effect than tariffs themselves. Barclays today, they cut their S&P 500's 2025 year-end index target to 5,900 from 6,600. They kind of put this into buckets though. They say there's a 25% chance we surge to 6,700 or so by the end of this year. They say there's about a 15% chance of also going into a bear market this year with the S&P hitting 4,400 or lower. Fed Kashkari says this is the most dramatic shift in confidence in the last decade, save for the COVID era. A lot of the uncertainty shift is about tariffs. And Fed Kashkari says in the next year or two, we ought to be able to reduce interest rates further. Fed Kashkari says policy uncertainty is complicating the Fed's job. And Trump says today that we have to have Greenland for national security purposes. It was also reported that China's Vice Premier Li Feng spoke with U.S. Trade Representative Greer by a video call. So again, there's not a whole lot to go off of today. Why you're seeing that recession trade coming back into markets, perhaps it's some of the, tariff comments today from Trump, the fact that tariffs will be going into effect, that, it's not as flexible maybe as some thought, and that's going to continue to weaken out, hit the economy, or perhaps it's Fed Kashkari and his comments today on uncertainty being an even bigger kind of drag on the economy than tariffs are in and of themselves. We really don't know. Could be some of the price target reductions from Barclays and some of the other firms that we have seen in recent days. I'm not exactly sure. If you want to add your thoughts to this, feel free to down below in the comment section. But what's also super strange is TLT is down 0.5%. So at the same time you have this recession trade, bonds are not acting like, we're in this recession trade. Bond yields are actually going higher, which does not happen during recessions. And you're actually breaking down on a technical level today on TLT. So there's a lot of weird things going on today that really do not make a whole lot of sense. But I do expect over the coming days, when we get more economic data coming out tomorrow, and then your big data on Friday, that we're going to see a big move for Tesla. Now, we talked about this big move in the last video. Now the stock's down 5%. I think that's a pretty big move, but you could get an even bigger move over the next 2 days, depending on how the data comes out. And really on the downside, we are holding support at this trend line. Like, that's what you want to see. So from a bull perspective, it's not all over, okay? If you can hold support at this trend line and then ultimately get back above that 200-day moving average, things look great still, okay? But if you break lower under that trend line, then you're going to come down and test likely that 20-day moving average at 257. If you get below that, then you're coming down under this trend line, which is going to put you at about 250. And then under that, you're kind of in a range between 215 and 250. So by the end of this week, you could see Tesla below 250 maybe in the 230s or even 220s, or you could see Tesla approaching 310. That's the kind of range that I'm expecting here. And top to bottom, that is huge for effectively now only 2 more days. That's why I think there's going to be a big move. And again, it really comes down to the data. Tomorrow, you are going to get your GDP growth rate quarter over quarter, final numbers for Q4. You're expecting 2.3%. I don't think that's going to change. It's the final estimate. We've had 3 already, so I would be surprised if it changes a lot, but it's always possible. We will get the goods trade balance, which will feed into a new Atlanta Fed GDP Now update for Q1 GDP, which is still at negative 1.8%. You will also get initial jobless claims tomorrow, expecting that to come in a little bit higher than last week at about 225,000. Continuing jobless claims and wholesale inventories month over month will also be coming out. That all will feed into a new GDP report. Pending home sales month over month and year over year also come out tomorrow. Fed Barkin speaks at 3:30 p.m. And then on Friday, you are going to get your core PCE. We already have the inputs to that, so it shouldn't be a huge shocker when it comes in line with estimates around 0.3%. Personal income expected at 0.4%. That's not a huge catalyst as long as it's not too high, because if income growth is too high, then there's no way you'll get back to 2% inflation, right? It's personal spending. That's the big catalyst. We've talked about this on the channel plenty of times before, but the last time you had 2 back-to-back negative numbers was during the COVID crash, okay? So if February's number is negative as well, you're going to start hearing a lot more about a potential recession following January's already negative 0.2% number. So I wouldn't say I'm super confident that we're going to get a strong number there, but I think just, getting a positive number would be enough to quell some of the recession concerns, perhaps, although I don't think the markets are really pricing in a strong chance of a recession nonetheless. So let me know what you guys think down below in the comment section. If you have something to add here, feel free to do so down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.